Okay, so let's get started for today's lesson. The previous lesson I introduced to you is about the candlestick patterns, right? One candlestick pattern, double candlestick pattern, and three candlestick pattern. All right. And in today's lesson, I will introduce to you how we can combine the candlestick pattern with the price action pattern. Okay. And in trading, a single signal often carries high-ranges risk. To increase the probability of success and achieve optimal entry exit points, we need to seek multi-layer confirmation from various analytical sources. In this article, I will focus on the core strategy. Combine multiple price patterns and supplementary technical tools to generate super strong trading signal for all of us. I will show you the title of today's lesson on the chart, and I will give you the real example by using the gold chart or other currency pairs or crypto. It also depends to which assets forming the suitable pattern. Yeah, like today's lesson. And this is the topic. Yeah, enhancing trading signal strength by combining patterns and technical tools. Okay. And the first article we need to explore in today's lesson is utilizing multiple price patterns to create stronger signal. Yeah, stronger signal. And the common patterns for trading is usually the triangle breakout, pullback to support or resistance. And I will use with other technical tools like EMA or RSI. So let's start it with the first one, the triangle breakout pattern. The triangle breakout pattern. And firstly, we need to identify the trend, the upper trend and lower trend to draw the triangle breakout, the triangle pattern first. And then we will wait for the breakout candle that is going to be exist. Okay. And the core signal is the triangle patterns like symmetrical, ascending, or descending indicates a phase of accumulations or indecision in the market. When the price breaks out of the resistance line or ascending triangles or the support lines of descending triangles accompanied by high volume. Okay, remember this point, high volume. Okay, and it signals a new trend is about to form. So that is the theory to identify for by using the triangle pattern. And we will have three type. Okay, three type of triangle pattern is going to be used in today's lesson. Symmetrical, ascending, and descending. And the first thing that we need to identify them on the real chart trading. And like this one, you can see that gold prices in the 1 hour time frame is forming a higher lows at the moment, right? Even though that higher highs haven't formed yet, but we can identify a upper trend, a lower trend down here by using this trend line connecting the lower trend together to the closest, to the candlestick near together. And then we connect the higher highs together. Okay. And as you can see, it's forming nearly a triangle. And now we are waiting for the breakout or breakdown candlestick is forming, and it depends to the market. Now you can see that gold price is still moving in a narrow range, and the candle body and the current candlestick patterns, and with others, with other previous candlesticks, is lying on EMA 200. Okay, so this is indicates for the indecision of the market, and we are waiting for a clearer trend. It will happen. Okay, at least this candlestick, the current candlestick, it should be a variable zoo. Yeah, to break out from 4013 level. If this candle break out strongly from this upper trend. So this is the confirmation of the market, of the gold market, is that, yeah, this buyers is coming back and dominating the market. Okay. On the other hand, if the current candlestick form a bearish one, they change from the bullish into the bearish one, and that bearish candlestick break down strongly and heading to below level 39.96, which is break down from the lower trend. So that is dominating, the sellers dominating back to the market. Okay, and sellers control the game. And also we know that the market still reject for buyers. Okay, so it's kind of easy for you to draw a upper or lower trend line for the triangle pattern. Okay, and for the if we want to predict the future, the upcoming direction of the gold market, just choose the the newest candlestick together. Okay, connect it together with this trend line, and you will see a triangle will happen. Okay, will forming on your real-time trading chart. So by using this, okay, I will show you this. Where is the this path is forming? Yeah, higher highs and higher low gradually. And now it's moving in a very narrow range, and we are waiting for the confirmation or the signal of the market that it will choose which direction. Yeah, the big players will choose which direction. Okay, and if until today New York session, gold price can break out strongly from 4012 to 4013. So that will be the support for next week. Yeah, for the bullish momentum next week. Okay, so our mission is just identify the upper and lower trend, connecting the nearest candlestick, lows and high together. And the triangle patterns will appear on your trading chart, and we need to be patient to wait for the signals from the market. And if you are scalpers like me, you can looking for the signal in a smaller time frame. Yeah, we can draw this triangle pattern in a smaller time frame, like 5 minutes or 15 minutes, to have the scalping signal. Yeah, scalping entry zone. And for 1 hour time frame is we have the broader view for a daily plan, trading daily strategy. Okay, so I just did a brief analysis, and this is also the example for you by using the triangle pattern. Okay, and with the candlestick patterns forming to have a clearer confirmation. Okay, let's go back to the history. So let me check if we have any case. Yeah, that's already happened. Okay, so let's start with this one, this period. This time is when the market moving sideways after a drastically dropping momentum in at the end of October, right? So when we identify the sideways period of the market, even though it's moving a sideways range, however, gold is still forming higher highs and higher lows, but in a it's narrow range. Okay, so we can connecting the lows together, right? Connecting the lows together, and then we just do the similar action with the Yeah, with the high together. Yeah, connecting the high together. And here we have, okay, let me change the color and the line to help you see it more clearly. Okay, so this is the triangle patterns that's on the chart. And when you see that this candlestick break down from the lower level, yeah, lower trend line. Let me show you the price level. That is 40.71. And the next candlestick is another, yeah, powerful bearish candlestick form. And this is officially the confirmation of the market that gold traders, yeah, big players of the gold market choose the sellers, right? Choose the seller. And we can observe the trading volume as well by click to indicators and choosing volume. Okay, so we compare to this one, and you see that this candlestick patterns, they do not have a significant quantity of volume. Okay, the volume is not significant. However, you can see the momentum. Yeah, the momentum is very clearly. So that, yeah, this is also a confirmation for you that the market choose the sellers already. Okay, so sometimes we can rely on volume if it's increased significantly. However, if it's not, you can observe, yeah, the momentum of the candlestick of the next candlestick forming. All right, and by identifying the triangle patterns and having the confirmation candlestick like the bearish one, the powerful bearish one, you can confidently to set up a scalping signal with this entry zone. Okay, so let me just draw it for you. We will choose the short position and the open price. Yeah, the open price of the next candlestick will be our entry zone. And for the stop loss, we can set as the nearest higher highs. Yeah, the nearest high. Okay, the nearest high. And for the take profit, you can set, yeah, for the nearest low. All right, which is here. Okay, so if you see the risk and risk reward ratio is not balanced, yeah, now you see that the risk ratio is higher than the reward ratio, right? So we can consider again to lower our trading stop loss, yeah, to the previous high, yeah, higher than the bid for the position of the candlestick breakdown. Okay, this is where 40, 87. Okay, and for the stop loss, we can set as the nearest high, nearest low, or the longest low. Okay, and if we set this take profit for the nearest low, you can see that it nearly balanced. Yeah, risk reward ratio is balanced. And if we we acquire, yeah, we hope for the bigger target, take profit, you can choose. Yeah, you can move this take profit to the next, yeah, to the next lows, to the next previous low. Okay, previous low. Okay, and so that's it. You can see that our risk reward ratio is increased up to 2/1. Okay, and officially, you can see on the chart that gold price dropping down to 38.83. Yeah, it's not stop at for 40.11. It's not stop here, and it's dropping down drastically to 38.98. Okay, with this confirmation signal for you that the breakout, the candlestick breakdown from the lower trend. So this is the reliable signal for you. And if you want to set the safer entry zone, when you see a candlestick breakout or breakdown, you need to wait for it to retest. To retest to the trend. Okay? Because if the momentum is very strong, the falling or bearish momentum is strong. Down ahead, it's down to 40.42. But we FOMO, we FOMO, and we do not have the good position because this is a 1 hour time frame, so we cannot see the noise in a smaller time frame. Okay, let me come back to you in a smaller time frame. Hang on a bit. When we look at the gold price, looking at the gold price in a smaller time frame, you will see the candlestick moving up and down, right? Okay, here we go. In a 5-minute time frame, there is just it was a powerful bearish candlestick. However, it will retest. The price will retrace and hit to the trend once again to check the ability of the supporting of the sellers will keep on going or not. And this time you can see that price heading back, heading back to the lower trend. So this is the perfect price zone for you to re-enter. If you're looking in the smaller time frame, and you can increase your entry level down here, because previously I just did a analysis for you in the 1 hour time frame. And if you want to set up a better position, you need to look into the smaller time frame, and I choose 5 minutes to have the detailed entry zone for you. Okay, and that is when the price retests to after a breakdown from the lower trend, here, we can confidently re-enter for the sell scalping signal. Okay, sell signal. And for the stop loss, there are two ways to set it. One is you can set as the previous peak, okay, which is kind of far away from $14 distance, which is 140 pips. If you're swing traders and you trade by using the pattern, setting the stop loss by using the pattern, that you have to accept. The stop loss may be very large, in the large range. And for this case, it's increased up to 140 pips for stop loss. Okay. And if you just follow the risk reward ratio, you just set with my formula, 50 pips for stop loss and at least 50 pips for take profit. Okay. And now in today's example, I choose the first way, the first solution for you to set up the stop loss. Or you can set here, even safer. And you see that it never hit to 40.74. The price just retests here and it cannot go higher because we have the confirmation of the market that this candlestick is a very powerful breakdown bearish candlestick pattern. All right. And to identify the trend line, the upper or lower trend is very important whenever we identify the triangle pattern. And we should do it in 1 hour time frame. Okay. And if we are looking for the entry zone, let's go into the smaller time frame to have the best position. Okay, because in the big time frame, it's harder for you to have the exact good entry zone. Like we enter, we're looking for them in a smaller time frame. All right, and this is when we catch to this sell signal at this entry. It's gonna be a big hit for you, a big victory for you, because now you can see that gold price is still moving, accumulating around 39.98 to 4,000. Yeah, 4,000 or 4,010. It cannot increase higher recently. All right. And this is also the starting for the downtrend that is happened until now. All right. So that is the example. Yeah. And this triangle patterns is the common one. And I always see this pattern in my analysis. Yeah. Okay. So you say that the candlestick, the current candlestick is having very long upper wick and the bearish coming back and dominating the market. Yeah, which made it falling down to 4,000 already. Okay, so let's move to the next one. Combine with the pullback to support or resistance level. Combining the candlestick pattern with the pullback to support and resistance pattern. Okay. Supplementary signal. After price breaks through a significant level, such as the triangle's resistance line, there is often a pullback, like I just shared with you, to retest this level that was just bridges. And there are two steps to help you identify the signal. Step 1, price successfully break out the ascending triangle pattern. Step 2, price pullbacks and tested or retest the old resistance line, which has now turned into a new support. Okay, and that is the optimal entry point, is when the price bounces back upright at the support area. And this combination provides two layers of confirmation, making the trading signal extremely reliable. And for this point, you can consider for the first hammer, hammer candlestick pattern, or the Marable Zoo candlestick will happen. Okay, and for me, I always prefer the Marable Zoo or the candlestick having a big body. Okay, having a big body will be a reliable signal for you for the goal, for the signal we set up. Okay, and the next method, we will combine patterns with technical tools. Technical tools, and the first one I will. Yeah, this is my favorite technical tools. Like I always use it on my trading analysis. EMA. Okay, so now EMAs. Are you already clear how to set up the EMA setting, EMA indicators on your trading chart? Do you need me to introduce to you once again. All right. So yeah, I guess that you don't need me to show this. Yeah, show up this because I already show it many times, and I guess that you remember how to set it correctly. Okay, for EMA, yeah, when we can set up the scapping signal by using EMA, that is when we're looking for the crossover. All right. We're looking for the crossover for the two EMA ribbons, at least two EMA ribbons. All right. And for you, this is the one. This is the one. As you can see at this point, okay, I will mark it up. I will highlight it. Yeah, I just show you the okay. This is the crossover between two EMA 34 and 89. And it forms a marble zoo, nearly a marble zoo candlestick pattern. And the body of this candle is significantly, and it's also engulfed. Yeah, it's also engulfed the previous one. Okay, so this location, we have two condition. Yeah, that support for the downtrend will happen, right? We can see this is the how we say that? Yeah, bearish engulfing pattern. Bearish engulfing pattern. It happened. It happened. And the body of this candlestick engulfed the body candlestick of the previous one. Yeah, the bodies of the previous candlestick. And it's lying on the crossover point of two EMA ribbons. That is EMA 34 and 89. And officially, you can say that it's starting for the bearish, the bearish trend, right? So whenever you see a crossover, no matter what time frame, whenever you see the crossover of two EMA, you will you will focus on the current candlestick pattern that's forming and which direction it's choosing. If if this candlestick is a bullish Marubozu or a bullish one, a bullish candlestick one, it is the signal that the buyers dominating the market. But for this case, this is the bearish dominating and winning the game. And the crossover was filled by a powerful bearish candlestick. And after that, there is also another two bearish candlestick forming on the chart. And this is you can say that it's nearly looking to the three crown. Yeah, three black crowns, right? And obviously, it's heading down to 39.30. Yeah, $39.30 level. And when you see this happen, okay, when you see this crossover forming on your chart, let's focus on the candlestick. All right. The current candlestick that the market is forming and looking for what direction. Yeah, what direction or what signs that the market is choosing right now. Okay. And if you want to set up a scalping signal, okay, so let's go back into a smaller time frame once again. So this is the point. Yeah. In a smaller time frame, like 5 minutes, this is where the bearish candlestick forming. Okay. And our entry zone is the open price of the next candle. Yeah, open price of the next candle. And our stop loss will be set as the current peak. Okay, let me show you. short position because we bet for the bearish. Yeah, bearish. Sorry, I need to check a bit. Okay, so this one. Go back to 5 minutes. Okay, so this is the crossover. Yeah, the crossover of three EMA ribbons. Yeah, even though that in the 1 hour time frame, you see that it's just the crossover between two EMA ribbons, which is EMA 34 and 89. But in a smaller time frame, like 5 minutes, and this is the favorite time frame that we choose it to set up the scapping signal, right? And you see that this candle, yeah, this candle is starting for the bearish reaction. Bearish momentum is dominating the market and it's brought down. Yeah, it's break down from the crossover. That's from the crossover of the three EMA's ribbon. And this is and the open price of the next candle. Yeah, we will always pay attention to the open price of the next candle. This one will be our entry zone. And stop loss we will set as the current peak. Yeah, the nearest peak or nearest high, which is 40.15. And for the take profit is set as the nearest lows. Yeah, which is 39.77. And obviously you can see that risk reward ratio is 1 to 1.1. Okay, so you can lower your stop loss a bit to 40.12 and it will increase your risk reward ratio up to 1.7. Okay, and obviously that this signal starting dropping down drastically. Okay, and it is starting for the current downtrend. Okay, so this is how we can use the pattern. Yeah, use the patterns with technical tools like EMA. All right, and I would like to remind you a bit that we have three consecutive bearish candlestick, and yeah, this is nearly a three black browns. All right, three black browns, and it happened. It's lying after an uptrend. Okay, and this is also the signal, and the signal is stronger when the last candle of the three black browns patterns cross over. You're lying on the crossover of the three EMA ribbons, and obviously we can count on for this signal we set up, and if you see it clearly, yeah, obviously it will bring you a lot of profit. And until now, it still did not hit your stop loss. Yeah, until now. So that's why I always remind you to be patient and wait for the perfect condition. Yeah, perfect condition to enter a signal. For days, for anyone that's busy with your work, just for one trade, you can hold it for many days. But your profit will increase drastically, right? Your profit, you will receive a lot. But the difficult thing is how can we identify it? How can we identify the good scalping signal, good entry zone for that qualified signal? Okay, and for this lessons and for every lessons, okay, I have time. I spend my time to share the experience or the information to you. I hope that we can, we can remember and use it effectively to your trading analysis. All right, and that's just the two common way that help you to use the combo between candlestick patterns and technical tools or price action pattern. Okay. And anyone, do you have questions want to ask me for today's lesson? Yeah, this is the key. Yeah, this is the key and common strategy. Okay, that's most of the traders use, and I use it. I use it every day. Anyone have a question?